Feel the beat, the future's near. Mind is fine, lose the fear. Hands up high, let's celebrate. In this groove of fate awaits.
Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future.
That will make us money.
All right, it's August. I can't believe it's August already.
Yeah. What a week.
Yeah, it's been fun.
It's been fun.
This
second correction of the year.
Yeah, I mean, I guess the Nasdaq was in correction. Technically, the S&P did not hit the correction number.
Yeah, corrections means that if you go 10% from the high. But a lot of volatility pick up basically the last few days. The last couple of weeks, let's just call it.
Yeah, definitely. Like over the last month, really. Yeah, let's talk about volatility, right?
Mm-hmm.
I think people get scared in times like this.
Yeah.
That something is going wrong. There's never a shortage of headlines of all the stuff that's terrible in our world.
Right.
In reality, most of the things are the same they were.
Well, it's interesting, right? Like how sentiment just changes real fast, right? Like if you kind of see what happened last week is, one, we had an employment number that came in that, first of all, we had the Fed basically telling us that they're going to cut rates in September, right?
Which is a positive. That's good.
Which is a positive
been waiting
thing,
for that.
right? But also that's a sign that things are slowing down, right? You cut rates because of that. Two, we had an employment number that was bad in
bad-ish.
Yeah, it was not great.
Yeah, but there were some nuances to it as to why it wasn't good.
Yeah, so unemployment has gone up to 4.3% from 4.1%.
Yeah.
So it really a lot of signs that the economy is slowing down, right?
If you asked us a year ago, when everybody was complaining about inflation and the Fed and how there was no slack in the labor market, that it was too hard to hire, that was the problem last year. Right. And now that we're getting it, now it's a problem that we're getting it.
Well, listen, I think now bad news has become bad news again because inflation is down.
Yeah, so that's bad?
That bad news is bad news?
No, that inflation is down.
No, inflation is down.
I mean, bad news should be bad news. But again, I went back and I looked at the last recessions in the 80s, 90s, and 2000s. I'm not counting COVID because it was a weird time. The average unemployment rate in a recession, this is what everybody's, quote, scared about, is that we're getting these recessionary fears. But the average unemployment rate during those was 7 to 10%.
Right.
Which is a huge far cry from 4.3%.
Yeah, I mean, when I went to school 20 years ago, the full employment was 5%.
Right. Let's remind people that last year, 22 and 23, we had the best employment since the 1950s. Right. So let's keep everything in perspective, and so it's important to kind of know that the headlines, a lot of times, obviously we know headlines are driven by fear.
Clickbait.
Right. If you say, I joked with my clients yesterday, I said, you're never going to see this headline. Breaking news. Everything's fine.
Yeah. Well, yes, that's true. But I think let's talk about what happened that created this change of sentiment, right? Okay. So you have, again, some recessionary fears that kind of spiked up again, right? You have basically the market has been very frothy, right? Let's not forget that the market has been very good the last 12 months, year to date, right? And frankly, a lot of the big tech companies have just become too expensive, right?
Absolutely.
So this crowded trade in the Mac 7 / tech companies that we talked about a lot on this podcast, really is become very expensive trade, right? Yeah. So you add that, and then also some fears to maybe this AI bubble is kind of being created, right? Where a lot of money is going towards AI, but it's not really showing up at the bottom line for a lot of companies, right? So that's happening too, right? And then we had this carry trade out of Japan.
And the term carry trade has become the most exciting term that nobody who's ever heard about investing in their lives now know what a carry trade is. So Hatem, why don't you explain carry trades to us?
Carry trades.
Very high level.
Carry trade 101. Okay.
Yeah, very high level. We don't need.
So carry trade is this happened in Japan. You borrow money in a place where interest rates are very low, and you invest them in a place where interest rates are higher. And the idea there is you have lower rate, you invest in a place where higher interest rates are, and you make money, and then repatriate your money or your money in the currency where interest rates are lower, and you make more money. So what happened is, there's a lot of this happening in Japan because Japan has a very, very low interest rate. But what happened is the yen has appreciated about 10% last year. So after you add the fears of what's going on with the economy and the yen is going up, all these trades, so a lot of investors borrowing in yen, invest in US dollars. When the yen has appreciated or the US dollar has gone down, they had to unwind these trades. So sell their investment in the US and bring them back to Japan to pay off their effectively their margin, right?
It's important to note that the yen was at an historic low.
Correct.
And that the Japanese stock market had been on a tear for the last 2 years.
Historic high for 30 years.
Yeah. I mean, 1987 was when it reached its high. And then it broke the high, and I think it's actually back below that now. But it broke the high this year.
Yeah.
And it was a very crowded trade also.
And there's two things there, I think. One is this is a technical thing. Right. There's nothing fundamentally wrong with the US economy. You know, these are hedge funds, these are institutional investors who are trading. It's a trade. It's not an investment per se. And two, it was a crowded trade. There's a lot of people doing this. And when these crowded trades usually kind of get unwound. That's the word. Okay,
it's a hard one.
It's a hard one. Okay, it's violent. It happens real fast. You know, and that's why you've seen the market almost drop 5-6% one day and then came back. Right.
Yeah, it was interesting because the Japanese market was down like 10-11% in a day.
Correct.
And that sort of carried into our trading day. And on Monday, for those of us who were up before the markets open, which is all of us in this office, I woke up to see that the market was down 6%.
Correct.
And I went, what? And by the time the market had actually opened, it was down 3%.
Correct. Exactly.
So yes, it's part of this fear trade. It's part of people going, okay, well, this is a technical. And again, you know, this carry trade is one of several things that has kind of happened. And then we haven't talked about the almighty election in addition to all that.
Yeah, I don't think the election even mattered at this point. I think this is just sort of technical stuff.
Listen, man, you're not hashtag Kamala Crash.
Kamala Crash. I didn't hear this.
No, that's the Trump. The Trump is now saying, and again, we're not taking sides on politics here, but the sort of like Republican Trump view is that ever since Kamala entered the fray, the market has gone straight down.
That's good. That's good. That's good marketing.
If nothing else, Trump is a very good marketer. So that's some of the negative stuff, right? Seasonal weakness in general in the markets in the summer and fall, obviously leading into an election. But let's talk about some of the positives that actually are out there.
Yeah, some of the positive is, you know, as portfolio managers for individuals and financial advisors, right? We, first of all, we want to teach our clients that these things happen. These are normal. We haven't had a proper correction like this in a year or so, right?
Since last, I think, October.
So it's been a minute, right? These are normal things when frothy valuation become part of the market, right? So that's not number one, right? Number two, also it's an opportunity to buy, right? Like when you see things down 10, 15, 20% for really no fundamental bad reasons, right? Like, you know, we've seen a lot of great companies go down quite a bit. Then that's an opportunity for you to think about, hey, long term, do I want to own this stock or this ETF or this fund because it's down 10% or 15% because some external reasons.
And let's not forget that bonds have had a great rally in the last month.
That's a great point.
Again, the importance of being balanced, having other asset classes. You know, we always joke that diversification never feels good. Because when the market's screaming to the upside, you're not doing as well. And when the market's falling hard, you know, maybe you're still losing money, but less money. But in the end, over a broad amount of time, you're actually gonna do very well by diversifying, by having asset allocation. And most of your portfolio's returns come from your asset allocation.
Yeah, historically we've never made any interest or yield in bonds, right? And now we're making 5% or more. Every portfolio, even my portfolio, has bonds now.
You have bonds?
Which is crazy.
Guys, something's going on here. This might be a buying opportunity. If Hatem's buying bonds, this might...
I have some unis. So. But the reality, every portfolio should have some yield because you can get some yield, and also it dampens the volatility around the market volatility. And we're going to see more of this, right? As you said, the election is happening, right? This is part of the normalization that we're seeing happen over the last few years since COVID. So you should take these opportunities. And then actually, I'm very happy that I didn't have a lot of clients freak out this week. I have actually some clients who called me and say, hey, what should we buy? Can we add money and so forth? So that's how you want to be thinking in times like this. Is what are the opportunities? Do I have any cash that I can put to work? Because you know, when everything is good, it's probably not the best time to be putting money to work.
You're not going to make money every day in the market. You know, this is my son and I invest in his account together, and you know, we went over stocks, and he picks his investment, and so he had been looking at it as it's gone up, and he's got all tech stocks and such, and he's like, well, did I lose money this week? I go, yeah. You know, you didn't lose money, Micah. You're down this week. The market is down, and so you're down.
The words are important.
You need to understand that the market doesn't go straight up. And it's funny because his birthday was last month, and right around where the top of the market was, and I said, you got some birthday money, kiddo, like it's time to put it to work. And he's like, oh yeah, let's add money. So he added money to his account.
Oh, what a lesson that is.
You know what I'm saying? I'm teaching him dollar cost averaging at 10. You know what I mean?
That's amazing.
So this is important lessons that everybody needs to know. This is, again, why working with advisors is super important. These are the times where you need to put money to work. And again, it doesn't have to just be in stocks. Right? It can be in bonds too. I know it's called future money, but in the future, we could make money on bonds too.
100%. Listen, money is money.
Exactly.
So that's what's going on with the markets. Obviously, we're here if you have any questions.
Just a quick update for you guys. You know, what we're really going to talk about is stuff that's way more fun now.
Dude, the Olympics.
Let's go. Let's go. Oh, by the way, did you see the 200 meters yesterday? And
I did.
Like, she was so good. Like,
isn't the Olympics about those moments?
It's about those moments, about the sport that nobody cares about for 3.75 years.
Maybe you don't, but this is their time in the sunshine.
No,
right?
I said most people. I love the Olympics. And there's obviously specific parts of the Olympics. Like, I'm kind of bummed that swimming is over. I love the swimming. The French did really well in
well, let's first of all talk about Paris. Like, isn't as someone who's lived in Paris and spent some time there, the city has really become an amazing backdrop. And if you kind of talk to people, Parisians that live there before the Olympics, there's a lot of anxiety around what's going to happen. Parisians and usually very skeptical about things. And
they're the nicest people ever.
But what happened is, from the opening ceremony, right? The city was an amazing backdrop, and I think the execution was insane. Like, to just have everything going through the Seine and like seeing all the, l'Arc de Triomphe, all the things that you could see.
That was the Arc de Triomphe for those who didn't catch that.
Everything that you've seen, all the amazing monuments that Paris has.
Dude, watching beach volleyball in front of the Eiffel Tower, that's crazy.
What an amazing, I mean.
I don't think there has ever been an Olympics with a better
backdrop,
a better backdrop, a better visual appeal, right? You got people swimming in the sand, despite how dirty it is, whatever. Like it's just
say it's not.
They say it's not. Everything's fine. They're everybody's bitching about the water in the pools not being deep enough and the sand being too dirty. It turns out everything's fine.
Well, listen, we're not a sports podcast. So what we're going to do is we're going to try to talk about the Olympics and the impact, the financial impact of the Olympics, right? Globally. And then obviously talk a little bit about some of the streaming and like some of the things that we see, because I think this is super interesting stuff, you know? So number one is the way that LVMH partnered up with the Olympics, right? So
Louis
LVMH, Moet and Hennessy, which is one of the most epic brands in France. Not just brands. They have LVMH, they have Dior, they have Chaumet, they have Berluti, they have a ton. I mean, think 30 or different 40 brands.
Yeah. I don't know, man.
Yeah,
is he the richest these days?
No, he's not.
It's hard to.
He's
second now.
Yeah, it's a really fascinating company. He took it over in the 80s and just became
such an amazing business person.
Yeah, but what they did is they called it an artistic collaboration.
Yeah.
They basically paid the Olympics $167 or $168 million, and they became the official sponsor of the Olympic, but also they helped kind of build the whole, like the medals are made by Chaumet, which is their jewelry brand. Yeah. The outfits for the French team are made by Berluti. The obviously the medals are given in a LVMH. So really kind of that artistic.
So the Olympians are getting a bonus this year, man.
I think they're getting, but also like it's just a big commercial for LVMH, which is fascinating. And LA is going to have the Olympics in 4 years, so I think the bar has been set pretty high for us to kind of show up and do something amazing here too. Yeah.
With that being said, how much does the Olympics actually earn for the city of Paris?
So we did some research, we ran some numbers, right? And
turns out there's only been one Olympics that has ever made money,
which is
LA, baby, 1984.
All right. Well, we don't know about so the one thing about Paris is 95% of the event venues are either permanent, so they've been around for there before, or temporary, right? So there was not a lot of huge capital expenditures in the sense of building stadiums and so forth, which we know this happened in Brazil, it happened in China, So
London apparently lost a ton of money.
Also, but the reality is it's just a big commercial for the city, right? You host the Olympics not to make money. You host the Olympics because you want to showcase your city.
Absolutely. But they all lose money. That's the crazy thing. And billions of dollars, by the way, from the research that we did. Other than the one in LA, which I talked about, and the reason the one in LA in 1984 actually made money is because all the infrastructure was already here. So they didn't really have to spend that much money. I think what's interesting about the Paris thing, right, is Paris is having an issue because people aren't coming to visit, right? Paris is literally the most visited city on earth. So how is it affecting tourism?
Did you see Disney's earnings this morning?
I did not see it.
So Disney had their earnings this morning, and their parks actually was negative. Or they're slowing down their park, which was and they said because Paris, the Disney Paris they don't have enough visitors, right? So what happened is a lot of people stayed away. If you're not going for the Olympics, you definitely don't want to be there, right? So a lot of people stayed away. So it's a temporary kind of hit to tourism in general.
But the summer in Paris, that's their moneymaker.
Yeah, but I think I guarantee you this is actually going to be a much bigger positive impact down the road because everyone, I think they said over 2 billion people will see that, even that opening ceremony throughout the world, not live, but throughout the time. And that's really why Paris has done that,
Well, hopefully, I mean, it brings them, more people are going to see the Eiffel Tower because, then the lines are going to get even longer to go see the Eiffel Tower.
So let's talk financial. Let's talk a little bit. So NBC paid, I think, $8 billion, $7.5 billion roughly in 2014 for the broadcast rights, right? But I think and half of that I think goes to the IOC.
Yeah, half of all revenue from the Olympics goes to the IOC,
International Olympic Committee. And then half goes to the host, or at least to whoever is managing and running the Olympics. But I think with what NBC has done, and I really love this time around, is Before, when you watch the Olympics, you just kind of have to go to NBC and just watch whatever event NBC decides. This year, you went to Peacock, and you could watch every sport. This is over 5,000 hours of streamed content.
It's
right?
a lot, yeah.
You know what I mean? It's a lot.
If you want to watch badminton, you know,
Right,
you can watch it.
100%.
Yeah.
Like, and I think that's really, because the Olympics, unlike like the Super Bowl or the World Cup, right, where there is a ton of different events happening at the same time, right?
Yeah.
And we all like different things, right? So I think having that Peacock experience was gangster move from NBC. I think.
You know, so and it translates into like, so I use YouTube TV,
Right, it's
and YouTube TV has all this stuff streaming, and you can do the multi-view also.
Yep.
And it is really cool. But I don't know necessarily that it's turning into big dollars for, you know, maybe temporarily.
I think it's going to be, maybe not big dollar, but NBC has made deals with Roblox, Snapchat, Meta, YouTube, TikTok, like just to kind of monetize some of the content.
Yeah.
Because, you know, you could watch it on YouTube, you could watch it on the NBC app or Peacock app, you could watch it on Twitter or Facebook or whatever social media platform you're doing. So I think they did such a great job being able to really allow us to watch whatever we want, and even some of the viral moments, right? Like the 200 meters or the 100 meter with Lyles or whatever. You know, that was amazing.
That was such a great that was such a great event.
Exactly, or you know. Simone Biles, you know what I mean? There's so many amazing things that happen, you know. Léon Marchand, who's the French
the French swimmer, man. There's already comparisons to Michael Phelps with him.
Dude, this is such a great story. 5 medals already. It's amazing.
Yeah. Oh, he did 5? I thought he went 4, because he went 4 for 4 in gold.
Yeah, and he had another 5th one.
Really?
Yeah.
Wow. That's impressive.
Yeah, it's really impressive.
Yeah.
So I think the technology has really caught up with the content in a sense where now we were able to really watch the content the way that we could.
Yeah.
So I think that's been exciting, right?
Yeah, it has. But it does bring us to, you know, an idea.
Show me the money.
Yeah, show me the money. Be it the cities or the streamers.
Yeah.
Who's actually making out? Like, what are these? You know, it's obviously we won't know until probably the end of this year. Like what that actually looks like as far as revenue goes and earnings go. But much like the Olympics, I think this brings us to a bigger conversation about, you know, you kind of brought it up as, you could watch it here, you could watch it there, you could watch it there.
Right.
You know, there's a positive to that. The negative to that is that everything's disjointed. Nobody knows where to go.
Yeah.
Who am I paying to like actually watch this stuff? I happened to decide for Peacock in addition to having YouTube, and then I was like, this was nonsense. I didn't need to do this.
so pre-Olympic, Peacock had 33 million viewers.
Yeah.
I don't think I've ever spent as much time on Peacock before.
Yeah.
Like I watched all the Olympics on Peacock, basically. Will those people that signed up will stay?
Probably not.
You know, probably not.
Probably not.
I don't know. I think Peacock has also the Premier League now. Like they have like sports rights or sports. You know what I mean? So
and that's what this is all about ultimately. Right. What any of these, the only way these streamers make money at some point is really from sporting stuff. Now the question is how much do they pay? Right. So much like the cities who host the Olympics.
Yeah, much like stocks.
Much like the cities who host the Olympics, you're paying a bunch of money.
Right.
To get a lot of eyeballs.
Yeah.
Right? This is what the Olympics are. And ultimately, a lot of them are losing money in doing so.
Sure,
And that's actually the case with streaming right now. And again, we won't know the numbers for the Olympics and such.
I know you didn't see this yet, but Disney made the money on their streaming service for the first time ever this morning.
And I knew they were going to because they kept, you know, Disney has been aggressively cost cutting on their streaming. But and they all have, to be fair, because you know when we went to COVID and we had these streaming wars and they got crazy.
The free money, time is over.
And everyone was home and they're like, streaming is the new thing. But
correct.
If you look at all the streamers, not named Netflix,
correct.
Okay, Peacock, Paramount Plus, you know, Amazon Prime, which we don't really know. They don't break out their numbers, but we know. Most likely, they're also losing money. In fact, I would argue that they have the worst content. Yeah, and we'll get into how they've improved now their content. But essentially, these companies, and I guess now Disney finally turned to a profit.
Yeah.
But most of these companies are losing money to get eyeballs. Now,
Yeah, that's exactly it.
every month, every quarter, they say, oh, well, our losses are getting smaller and they're getting smaller. But we're talking about companies still losing billions of dollars a year to produce streaming content.
Right.
On the flip side, you have Netflix, who made $2.5 billion in net income last quarter.
Well, I think what Netflix has done is they lost a ton of money for many, many years to build this moat, which is this massive subscriber base.
Yeah.
And now they have, in revenue coming in, and now they can make money on this by producing enough content and still make money, right?
Yeah.
So even
and
though
they have ad supported now.
Correct. And even they
have
spend 16, 17 billion, which is probably more than anybody else spent, right?
Yeah.
A year before.
Yeah, absolutely. But what is interesting now is we have a bunch of new players in sports, right?
Correct.
So obviously with the Olympics, we have NBC. You mentioned the Premier League.
Yep.
The English Premier League in soccer is obviously one of the biggest draws in the world.
Yep.
Right, and that's more of an international thing.
It's a global audience.
Yeah, exactly. It's less. I'm not sure what the deals they have with other countries and such, but that's what they have to bring sports here.
Yep.
We're sort of seeing again streaming taking over these sort of legacy sports platforms that used to exist, and none is bigger than what Amazon just did.
Dude, that NBA deal, right?
With the NBA deal, which basically cut out TNT.
Can you run through the numbers?
Yeah.
It's just I saw the numbers. I'm like, holy shit. Like,
yeah.
is
So
this even
TNT,
real?
which is part of Warner Brothers Discovery, which has had also been losing money streaming and things like that, with the exception of HBO. Max has been good for them, but Amazon pays $76 billion.
Wow.
For 66 games a year.
Hold on. Say that again?
Yeah.
Say that again?
76 billion. Over 11 years, to be fair. Over 11 years.
That's still $7 billion.
So $7 billion a year, basically.
That's insane.
To get what TNT was ultimately getting, the games that TNT was producing. What they're not getting, unfortunately, is Charles Barkley.
You know how much that goes to the players versus how much stays within the NBA?
I mean, most of it stays within the NBA. What it goes to the teams, right? So the teams are owned collectively
by the
NBA is owned collectively by the team owners and things like that, essentially. Yeah. So obviously, you see somebody getting a $300 million contract. Right. You're like, okay, well,
that makes sense.
Now we can pay for it, right? Yeah. It's the big deals like that allow this to happen. Yeah. So $76 billion. 11 years, huge. Now we're going to Amazon Prime for this stuff. Yeah. Amazon has made a big push over the last several years to get into sports. They have Thursday Night Football now, which used to be on ESPN or something. Yeah. I'm trying to even remember where Thursday Night Football was before them. So Amazon Prime has a lot of that now.
Yeah. So does that also, do you think, has some kind of global rights, like, because the NBA's aspiration is to become a global league, which
they are a global league for sure.
But is that part of why the calculus was to use Amazon? Because Apple has done that with the MLS, right?
Yeah, that's part of it. But frankly, I think that it boils down to who's got the deepest pockets. You know what I mean? And that's the thing, right? Like, you're seeing these deals. Warner Brothers Discovery cannot compete with Amazon.
Dude, they have $50 billion in debt, and they are struggling financially.
Yeah. And $50 billion is like a week at Amazon or at Apple. You know what I mean? So that's the thing, right? We're seeing these big time providers come in. Apple has the MLS soccer league.
Yeah, the MLS. I mean, I'm a big LAFC fan. Season tickets owner.
I went to one game, which was the worst game they've ever played.
Hey.
It was a great game, and we were very excited to be there. But I mean, it was a great stadium.
We lost 5-1.
It was rough.
Yeah. But Apple has the MLS deal, and they paid $800 million for 10 years. It was nothing. Right? Nothing.
So they bought it on the ground floor.
No, but what they did is they brought Messi.
Yeah.
And they created a deal. Messi has basically Messi, the only reason Messi is in the U.S. or at Miami is because he gets a cut of every Apple TV Plus MLS season pass download.
Yeah, plus
And
part of that team, right? in
when
Miami.
part of the team when he retires, and a cut of every jersey for every MLS player. So it's really an insane deal.
I mean, like this is, if you kind of look back, the only comparison you can think of, at its time was Jordan starting the Jordan brand with Nike.
Yeah.
When they offered him the biggest contract that had ever been offered in sports,
yep.
which was like a little over $1 million.
Yeah.
And they said, there's no way I'm doing this deal if I don't get a cut of every shoe.
I'll give you
that you sell.
I'll give you some breaking news for LAFC.
Yeah.
We first of all, we have
Hatem plays for LAFC apparently.
I love when they're gonna say we.
Yeah.
As if I'm sitting on the couch. As if
We did it.
we did it.
Yeah.
We did it. LAFC team is about to sign, or at least offered, Antoine Griezmann, who's a very famous French player, a deal. First of all, we have Olivier Giroud, who starts this week. This is probably not the podcast to talk
I
about
think
this.
it's great.
Yeah,
We're all
But,
learning names
Griezmann,
we can't
Griezmann
pronounce.
will be the second highest paid MLS player after Messi
Yeah.
if he comes.
So I have this thought, I have this vision that in 20 years, the U.S. is going to dominate soccer. And hear me out here.
In 20
Hear
years.
me out. In 20 years, the U.S. is going to be dominating soccer. And the reason is because of this. Is because we have the capital to attract all these superstars from other leagues. And soccer is now starting to become part of our daily activities, our sports culture now.
Yeah.
And so the generation that's coming up now is coming up soccer.
Listen, you're not wrong, I think, because we have a lot of young players who play in Europe, who play at the highest level. I think U.S. soccer has some problems, like the people that run it.
Sure.
There's a lot of grift and all the shit that.
Set a reminder for 20 years from now.
20 years from now,
that we're going to go over this.
But that's exciting, for sports fans, right? Like, again, we have, as you said, the highest capital, the biggest audiences, right? Like, we have such a multicultural audience that loves different kinds of sports, from baseball to soccer to NBA to whatever.
We're working
football,
on cricket next.
Right, the cricket, right? So I think is it the CEO of Microsoft trying to bring the cricket league
Yeah,
here?
Satya Nadella is trying to bring cricket to, which is the second biggest sport in the world, by the way.
Crazy, right?
Yeah.
So I think a lot of money going towards this. Who's making money?
It's hard to say, right? So Apple and Amazon don't break out their numbers for that, so we don't know. My hunch is both of them are losing money on their
I don't
deals,
think Apple
but
cares
but
about
they don't
making
care.
money.
To them, it's about ecosystem, right?
It's about service,
right? So Apple doesn't mind losing a couple billion, on streaming to basically have people on iOS platform, right? Amazon the same with Prime. They have pricing power with Prime. They raise it $10 a month, just like Apple can raise your service from $3 a month to $4 a month. Boom, billions of dollars right there.
That's
so they have this pricing power that Netflix also has this. And by the way, Netflix did a deal to do the 2 Christmas games in the NFL, right?
That's
Netflix getting into
and they paid a lot of money for that, right?
$150 million for 2 games.
Shit.
Okay, but again, it's this new tech advent into sports, and I think it's very important. And obviously, you have Disney is interesting because it's sort of straddles both sides. It's legacy media, but it's also has ESPN Plus and all this kind of stuff. So ESPN is a big thing, obviously with sports. NBC has Sunday Night Football. Peacock has Sunday Night Football. Whatever. So bottom line is these sports deals will remain to be seen because obviously we don't know how profitable these deals end up being for them. Right now, streaming giants most of them are still losing money.
Right. But they have enough cash to venture out into new fields and new races, and they know what the eyeballs are, right?
Right. But you have Paramount Plus, which I forgot to mention because they're kind of an afterthought. You have Warner Brothers Discovery.
I think Paramount Plus has Champions League.
There you go. Who doesn't want that? The B-raters.
Champions League is not B-rated. Okay.
Is this the second league?
No, the Champions League is the top teams in Europe Club Europe play
Oh,
against
okay.
each other. So
Oh, that's great.
It's
I
a
thought-
big deal. It's a big
What do you
deal.
call the league that's below the Premier League? And
That's the championship. It's.
oh, I'm sorry. One's the champion, one's the championship. Okay. Anyway, clearly I don't know enough about European football.
Yeah.
But you know, in the end, these things. So Warner Brothers Discovery are having a lot of issues. Paramount Plus is having a lot of issues.
Yeah.
Peacock is still losing money, and Comcast, who owns NBC Universal.
I don't even want to start talking about the shit show that is Paramount. With,
No, that thing is a nightmare,
it's not even-
and so is Warner Bros. So now they're trying to bundle things together to help
Yep.
save money,
Yeah.
and we're basically reverting back to our old cable
Yeah,
bundles.
and this
just
is
in a
why we
different
don't
way.
own any of the streamers per se, besides Netflix and Disney.
yeah.
You know, I think the reality is the costs are just astronomical, and Netflix kind of owns the category. Disney
Yeah.
is doing a good job because
And
they're diversified.
Amazon and Apple can afford to lose money,
Correct, yeah.
to gain eyeballs,
Yeah.
and so there's just no way for Warner Brothers to compete.
No, I
You know
think
what I
I
mean?
think we're gonna look back and say that Warner Brothers Discovery merger was probably as bad as the AOL Warner Brothers merger.
They're going for two of the worst mergers ever.
I know. Maybe one and two.
One
so.
company. Maybe they need to rebrand that company altogether.
Yeah.
But again, the future obviously is streaming. The more and more people are continuing to cut the cord.
Yep.
But in the future, like I look, I YouTube TV. I had used Hulu in the past. Now I
Yep.
use YouTube TV. Like that is cable in 2024.
100%.
Right, and it's just a more tech savvy cable bundle at this
Right.
point.
That's our episode.
Yeah.
I think we talked about. I think one. Don't panic. I think that's my.
Don't panic. Watch the Olympics.
Don't
You'll feel
panic.
better
Watch the Olympics.
on a streaming service.
Be greedy when others are fearful. I think
Yeah.
we'll give that to Warren Buffett. It's probably one of the best quotes I think in investment. Enjoy the Olympics. Enjoy those
Yeah.
moments because these athletes are really fascinating.
Yeah,
the
it's a good
level.
time.
The level of dedication and how much work these. I mean, it's just super inspiring. For them to do what they do and just
And for the next 47 months, we'll gear you up for the LA Olympics.
Oh, dude, I can't wait, man. It's gonna be awesome.
Yeah, it's going to be really fun, and definitely have to go to some of those. It's going to be a great event, and obviously, if you build a $5 billion stadium, you want to fill it with some stuff.
We have stadiums here, so we're good.
Yeah. All right, guys.
Cheers.
Cheers.